Warren Buffett, arguably the most legendary investor of our time, has just made a massive move. We're talking about the Oracle of Omaha, a man whose portfolio shifts can send shockwaves through the market. And right now, he's doubling down on a stock you may not expect. It's not a flashy tech company, it's not some trending AI stock, and it's definitely not the next big meme stock. Instead, Buffett is pouring billions into a classic old-school sector, energy. And the company he's backing? Occidental Petroleum. Why this stock? Why now? And most importantly, should you be buying it too? Stick around, because in this video, we're diving deep into the #1 stock Warren Buffett is buying right now. We'll break down what Occidental Petroleum is all about, the data behind the decision, why Buffett is so bullish, and whether this stock deserves a spot in your portfolio. Let's get into it. Hey guys, welcome back to the channel. If you're new here, we break down personal finance, investing strategies, and smart money insights to help you build long-term wealth. No fluff, just practical analysis and straight talk on how to grow your money. So if you like learning how the world's best investors think and how you can apply it, hit that like button, subscribe to the channel, and let's make some money moves together. Alright, let's cut to the chase. The stock Warren Buffett is buying right now is Occidental Petroleum, ticker OXY, and he's not just buying a little, he's going all in. According to Berkshire Hathaway's latest 13F filing and recent disclosures, Buffett has increased his stake in this energy giant to approximately 28% of the entire company. That's over $15 billion invested, making Occidental one of Berkshire's largest holdings outside its core, tech and finance plays like Apple and Bank of America. Now, Buffett is known for being extremely cautious. He doesn't jump into hype stocks or follow short-term trends. So when he increases his position in a company this aggressively, especially one in the often volatile energy sector, it's a strong signal that he sees something special. And that's exactly why this move deserves a full, in-depth breakdown. So, why Occidental Petroleum? Why energy now? And what makes this specific company stand out in a crowded field of oil and gas players? Let's break it down into 3 key reasons that align perfectly with Buffett's legendary investing playbook. Reason 1. Strong business fundamentals. Buffett has always prioritized the basics. He wants companies that are profitable, stable, and resilient. Occidental checks all those boxes. Over the last few years, the company has made major strides in cleaning up its balance sheet, cutting debt, and improving operational efficiency. In 2023, the company reported revenues of over $27 billion, a net income of around $4.4 billion, with strong free cash flow generation. That's huge, especially in an industry known for boom and bust cycles. What's more, Occidental has taken advantage of higher oil prices to reduce leverage and return capital to shareholders. Their profit margins are solid, and their cost per barrel of oil is among the lowest in the industry. That means they can remain profitable even when oil prices dip. They're also actively buying back shares and paying a growing dividend. Another Buffett-approved move. Buffett's team likely looked at Occidental and saw what he always looks for, a business that's not just surviving, but thriving during uncertain economic times. Reason 2. A durable competitive advantage. A moat. Let's talk moats. This is one of Buffett's favorite concepts. He wants to invest in companies with a wide economic moat, some kind of competitive advantage that protects them from the competition and ensures long-term profitability. For Occidental, that moat is operational scale, asset quality, and strategic positioning. The company has some of the most productive oil and gas assets in the Permian Basin, which is arguably the most valuable oil-producing region in the U.S. These assets produce high-quality crude at relatively low costs, giving Occidental a significant edge over smaller players. Plus, Occidental is heavily invested in carbon capture technology, a forward-looking bet that aligns with the energy transition. Their initiative called OXY Carbon Ventures is leading projects to capture and store carbon emissions, with the potential to generate revenue from carbon credits and meet growing ESG expectations. This is Buffett betting not just on oil, but on the future of energy. Reason 3. Undervalued with long-term upside. Buffett doesn't chase overpriced stocks. He waits. He watches, and when a great company goes on sale, he pounces. That's exactly what he's doing with Occidental Petroleum. Despite being a fundamentally strong company, OXY has traded at relatively low valuation multiples, especially compared to its historical averages and some of its larger competitors. As of Q1 2025, Occidental trades at a forward price-to-earnings PE ratio of around 12, which is modest for a company with strong cash flows and growing shareholder returns. The price-to-book PB ratio is also reasonable, and its enterprise value to EBITDA, EV/EBITDA, is attractive for value investors. Simply put, Buffett sees Occidental as a great business at a fair or even discounted price. And in his own words, that's exactly the kind of opportunity he waits for. But here's the thing. Buffett isn't the only one betting on Occidental. Wall Street is also paying attention. Analysts have generally rated OXY as a buy or hold, and institutional interest is growing. Recent earnings reports have impressed investors with strong operating margins and capital discipline. Hedge funds are also gradually accumulating the stock, especially as oil prices stabilize and fears of a recession ease. Now, let's not pretend this is a risk-free investment. It isn't. So let's talk about the potential risks. First, energy is inherently volatile. Oil prices are subject to global supply and demand, OPEC decisions, geopolitical tensions, and economic cycles. If demand falls or production ramps up too fast, Occidental's profits could be squeezed. Second, the long-term future of fossil fuels is uncertain. Governments are pushing for decarbonization, and renewables are on the rise. Occidental's carbon capture efforts help hedge against that trend, but it's still an oil-heavy business model. And third, Buffett's timeline is long. He's not looking to flip this stock in 6 months. He's thinking in terms of 10 to 20 years. If you're more of a short-term trader, or you're uncomfortable with the cyclical nature of the energy sector, this might not be the best fit for your strategy. So, should you consider buying Occidental Petroleum? Here's my take. If you believe in long-term investing and you're comfortable with some exposure to the energy sector, Occidental could be a compelling value play. You're essentially partnering with Warren Buffett in a company he clearly has conviction in. You're buying a business with strong fundamentals, a clear strategy, and long-term potential, not just because of oil, but because of innovation in energy. However, you still need to do your own research. Don't just buy because Buffett is buying. Look at your own goals. And if you got value from this video, hit that like button to support the channel. Subscribe for more deep dives into stocks, investing strategy, and financial freedom tips. And hey, if you want more investing breakdowns like this, sent straight to your inbox every week, check out the free newsletter linked below. Until next time, keep learning, keep investing, and as always, think long term.